Here, back for another update. Let's take a look at PulseX over here. And what we see with PulseX, so there was the ICO stage, or you can call it an ICO stage, but it was actually a sacrifice stage where people sacrificed their coins to get PulseX, right? This was a couple of years ago. It actually occurred right over, like around over here, right? People got their coins over here, price shot up, they made the same amount of money they put in, they all sold, and it dropped, and the coin dropped over 92%. Okay, now this is usually what you see with airdrops. You get the airdrop, you have an initial advance, a move back down to the lows, and then interest starts to pick up, right? This is exactly what happens with airdrops. So the fact that we already got this stage over with is a really good sign, right? The fact that we dropped over 93% and then the interest started picking up over here made a double top like formation. And this is a cup and handle pattern, okay? Then you see a falling wedge for your cup, and usually, for your handle. And usually in the stock market, in the Forex market, with cup and handle patterns, the handle usually comes down to the 50% retracement. But in crypto, due to its highly over-leveraged nature and market, you're usually going to see a move down to extremes at around the 70.2 to 88.6% fib. As you can see, when we measure the move from this very low up to this wave 1 high, we've only hit the 61.8% fib. So it wouldn't surprise me that we see one more sweep down there, because this is an ending diagonal, guys. This diagonals, anyone who puts bids into the ending diagonal during this fifth wave, right? During this fifth wave gets rewarded very well. Not so much the people buying into this region, right? Because they have to go through all of this chop. But within this region would be ideal, within this fifth wave. Okay, so we've hit the 61.8% fib here. Wouldn't surprise me we come down to the 70.2% fib at 0. Around over here. You guys see that? Okay, this is our buy zone right here, right? That's your buy zone. And so let me see here. So we found this fib by we found this support by taking a fib from this very low up to this high. We can also find this support by taking a fib from this low, this wave 2 low, up to this high. Okay, we're just doing it from these swing points. Let's take a look at the 78.6% fib. Okay, so it's around that same region. Okay, it's on the 702 now, right? If we measure from this swing low up to this high, it's on the 702. Wouldn't surprise me if we come down to the 786. So that means, in layman's terms, it came down. It's 78.6% of the way from this low up to this high. Okay, so this over here would be your buy zone. Have an ABC correction down, 5-way move up for your wave 1, ABC for your wave 2, and then what we would likely see from that low is something like this. A chop in here, yeah? Just like this. One sec. From here to here. Okay, you see chop like that, and then boom. Just like this. Chop may not last that long, so it'll probably look like something like this here. Like that. Like it will chop in here, make people very uncertain about their investment, and then go boom. Right? Same thing happened with AVAX, right? If you go on my Twitter, you can see that AVAX was doing the same thing as coffee did back in 2016 when it was producing an ending diagonal, and it was a really good trade setup. What we also see is from this low, let me see here. All right, cool. So, let me see here. Yeah, so what do we see here? So it's likely that when this bottoms out, you're going to have an ending diagonal, a really nice pop up, and you're going to come in for your third wave here, and it's likely going to hit your minimum technical target of your cup and handle. So if we measure the low point up to the top of the handle, and to be conservative, we're going to end this measurement from this right side to be conservative, and then we're just going to copy and paste, and we see that the minimum technical target, if we were to just flip these gains, if we were to just flip this whole thing on its head, it would come to over here at 0.00196. So within this region over here is likely when market maker will start to offload a little bit of shares, but it's likely they're going to take it higher. Okay, it's likely they're going to take it higher into August to October. And putting these time cycles on the chart, I actually see this with a lot of other assets, such as the S&P 500, Bitcoin, and pretty much all the alts. I see around that September, October time Q4. And yeah, so I think it can reach up here, have an ABC correction down to the 23 to 38.2% fib, and then have an extension of have a little bit of an extension of the fifth wave. This will be the most parabolic part. Okay, coming up to the golden pocket. And if we take a fib from this high down to this low, we can see that would be around your 2.618 at around 0.001, 1 cent. So from current prices, or let's just say from the bottom of this buy zone, yeah? It would be about 58,000% from this high, yeah, okay. And then from, let's say if you bought in right now, it's 50,000%. Not much of a difference, really. It's just an 8,000% difference in the grand scheme of things. So this is 58,000, this is 50,000. So that's why I say DCA is better, right? Don't go all in on one shot. This is your buy zone right here. Okay, 5-way move up, ABC, and then another 5 to finish that all off. If we look at the indicators over here, we see the volume declining in the handle. So that's a good sign. That means the composite operator is accumulating quietly. Now, whenever you have accumulation structures like this, especially with a ending diagonal, the composite operator is not dumb, right? They're accumulating shares all throughout this handle. But the only way they can do that without spooking the market is to do it quietly in small orders, right? So the volume declines in the handle, which is what you want to see, right? Because the composite operator is quietly accumulating shares. What do we also see? We see that the awesome oscillator is forming bullish divergence. So as we're forming lower lows on the price, awesome oscillator is forming higher lows. You see that? Then we have you see, like, when we were forming this top for our wave 1, so from wave 3 high up to your wave 5 high of your wave 1, you form bearish divergence on your awesome oscillator, and now we're forming bullish divergence as we're forming this ending diagonal here, right? We also see a bullish divergence on your RSI, right? This is your Class C bullish divergence, equal lows, and lower lows on the price. So that's your Class C bullish divergence. We also see a falling wedge-like structure, right, which is likely going to break out. So you can see that the price is squeezed. Price is very squeezed. MACD is turning up on the daily. Okay, so the trend is up. The trend is up on the MACD. And we have your truth strength index indicator turning up as well from the lows. So now remember, these indicators are lagging only to a certain extent, that's why I'm saying DCA is better. Now, going forward, we would want to see what Bitcoin is doing, but it wouldn't surprise me that we see a move down here. Okay, and this is where you would want to be buying. So from here all the way down here, you'd put orders here. Okay, let's go to the daily time frame here. And yeah, this is the analysis on PulseX. I think it's going to do really well. And yeah, definitely don't invest more than you can lose. Hope you guys enjoyed the PulseX video. If you have any questions, just let me know. Peace out and take it easy. See you in the next one.